Welcome, everyone. My guest today is Jon Gerretsen, Managing Director of Residential New Originations and Fulfillment Services at Situs AMC, to talk about how they're partnering with clients on the front end of the loan manufacturing process to reduce risks and make their teams more efficient. Jon, welcome to the podcast.
Thanks so much, Sarah. Great to be here.
Great to have you on there. I think our topics today are going to be very interesting. So the first one I really want to start out with is like setting the stage on the trends you're seeing in origination, particularly now that, rates haven't dropped the way the industry was hoping. Margins are still very tight. What are you seeing out there?
So you're right. I mean, rates are still high. Inventory is tight. There's a lot of uncertainty in the market. So what we're seeing is lenders, originators are being opportunistic, looking for products that still allow them to originate in the marketplace and expanding into areas where they might not have several years ago. So the last 18 months for entrants, there's been significant increase in second mortgage type products, home equity lines of credit, closed-end seconds, DSCR business type loans, fix and flips. So those used to be a relatively small percentage of the marketplace, and now obviously they've increased percentage-wise. And again, it's just a reflection of folks being opportunistic.
It's been incredible to watch. Situs AMC, people are very familiar with the work that you do, sort of, but thinking of it as in the secondary market space, right? Like not primary market, but here you guys are, you're really jumping into the primary market. Would love to know why you think now is a good time and, kind of what your vision is there.
So what's interesting is that, as you mentioned, right, we're a market leader in the secondary market in third-party due diligence. And actually, some of our clients have asked us to get involved in primary markets on the front end. We do a significant amount of work, and as the varied products that we see now, we're handling thousands of mortgage files in production on a daily, weekly, monthly basis. So the fact that we're that in tune with the marketplace and what's going on with products on the back end just made complete sense to get involved on the primary market, because if you're going to be basically looking and evaluating and essentially grading product post-closing, wouldn't you want to be, or wouldn't, as a client, wouldn't you want us to be involved in the front-end origination process and bring that value add from what we gain on the post-closing side into the origination space?
No, that seems like a huge advantage. You guys are knowing like, here, here's what we're looking for. Here's what we see, being something that trips people up. Here's what's kind of trending in that due diligence space that we're keeping an eye on. So what does that look like? What does it look like to help on the front end of the loan?
So it really involves best practices. So you mentioned earlier, what's going on. We talked about the market uncertainty, folks getting involved in different type of products. So if you have a lender that may not necessarily have originated second mortgages or business purpose type loans, we have the added experience on that side, having reviewed those products, to go in on the front side and help them originate and get to market a lot quicker. So number one, they don't have to build up resources, which can take quite a bit of time. And again, in an uncertain market, you can build up the resources and all of a sudden that market is gone. So we allow them to pivot. We give them the flexibility, where the agility to go in and face it's speed to market really on different product types, and it's based on our knowledge again of reviewing all these products on the secondary side.
Do you think of this as outsourcing, or is that like a word that you don't like?
So I spent most of my career on the origination side, and to me, outsourcing brings with it a connotation that, I'm going to put it over here when I get too busy, and it'll be a completely different process. It's, throw it over the wall if we can't get it done, and hopefully the outsource provider will take care of it. It's always been, and it is now, the way that we've built out our relationships on the secondary market side. It's a partnership. We truly become an extension of the client's team, so that down to the point where the resources that work on that client's team are the exact same resources. They're a dedicated team, and we're following that same business model on the front end. So it's not outsourcing. It really is part of their go-to-market business model. We can bring with it best practices solution. We we help navigate them into markets they may not be unfamiliar with, or help them become more scalable in markets where they already have a presence.
Let's talk about not just, it's difficult to do do these new kind of loans, you have to train new people, all that, but it's really that risk, right? Because if you have people doing them new types of products they haven't done before, it feels like that's where you guys can be such a help, because just taking out some of that risk.
Especially on the underwriting side, it's regulatory risk, it's financial risk, it's reputational risk. We can provide, our folks are 10 years plus in the business. So when they come in and they work for a client and become part of that team on a specific product, they bring with them that knowledge. They also bring with them the knowledge of their peers within our company that work on the back end side. They have regular communications so that here's what we're seeing. Here are some red flags. Here's a trend in this area of the country. Here's what we're seeing with this type of product. So that knowledge gets passed on to the folks that are working on the front end of the origination piece so that they have that added benefit. And it really is, we call it a manufacturing process. It's manufacturing data. That's what a loan is. So it just helps, streamline and help improve the end product.
How does outsourcing back-end tasks enable lenders to focus more on the things that they really want to do or are best at, right? Customer relationships, business development.
Do you mean the partnership? You use the O word again.
I did.
The best response to that is think of it in terms of we provide the back end support, the services that allow the lender or the originator to focus their time on customer relationships, borrower relationships, significant growth. And an example would be, say, a processor in a lending organization can typically handle 25 to 30 borrower files at one time because they're clearing conditions, because they're ordering appraisals, they're sending out disclosures. If we do all those types of activities for them, what that does is it allows that individual to focus all their attention on the borrower and the client. And if that borrower or client is shopping around with other companies, it's all about response time and service levels. So whether it's text, whether it's email, or whether it's a phone call, their response time improves dramatically, and all their effort can be spent on the borrowers and the clients.
So let's talk about that partnership more. I'll get the right thing there. Let's talk especially about, as we look at 2025, that was my first question, but I feel like the surprise over the last couple of years is how volatile the market has been. If you just look at mortgage rates, right, which then drives a lot of other things, it feels like we are all waiting for something that hasn't quite happened yet over the last couple of years. And maybe that's not necessarily just lower rates; it's just stability, so that people can make their business decisions based on what's actually going to happen. So maybe talk about how your partnership is helpful in that way.
It's extremely difficult in this market. I mean, just this week, right? Feds aren't going to cut as much as they were supposed to next year. All of a sudden, inflation numbers are lower today. Now it looks like rates are going to be lower again in 25. How do you hire and staff for that? And especially around some of the positions we're talking about, underwriter, and it's very difficult. It's also very expensive, and retention costs are high. So what we do, if you think of it, actually, when I was on the origination side, it was an insurance policy. I'd bring in somebody that could understand my business so that if there was a spike that took place, like we saw in September earlier this year, my turn times to my borrowers, to my brokers, to my correspondents doesn't go from 1 day or 2 days to 10 days. It stays at 1 day or 2 day because now I have this vendor partner that contractually provides service level agreements to me and to my borrowers. So, it's the old Pizza Hut. If they don't get it in 5 minutes, they get it for free. So it kind of puts a guarantee around service and quality, which is a great, backup to have when you get into these types of markets that are so volatile, because you can't hire 100 people. And then what do you do if the market doesn't come?
So when you enter into a partnership in a time like this, which it's very obvious, why this is so valuable during this time, in the near future, all we can see, right, is this kind of volatility. What happens when things get more back to, can I put in quotes, in air quotes, normal? How do you think the partnership really benefits lenders when it's a more normal environment?
We help them scale. I mean, it's response time. So for instance, we're not in a refi market now, given that, majority of first mortgage liens are below 4% coupons, somewhere around there. And, they're not in the money, as folks would say, for refinancing volume. If that should shift, and it can from a number of different reasons, we're there to help them scale to capture that market immediately. So it's a response to market. It's a pivot, as I mentioned earlier. And the other part that's and I believe we're unique to this in some extent, is that our solutions are, our primary market teams are all, like myself, spent their time, they're veterans of the origination market, and whether it be retail or wholesale correspondent. And so what we can do is we can look at a client situation and where they are, and they may have certain strengths in certain areas along the life cycle of the mortgage. Think of us as, if you look at it as Henry Ford, right? And it's an assembly process. The client may be good in several of those areas along that life cycle, and we can fill the gaps. And because we're experienced in their business model and understand and have a best practices approach, we can fill in those gaps without them missing a beat. So that, back to the outsourcing thing, the borrowers or customers, the whole goal is that nobody ever thinks that you're outsourcing or have somebody else. It truly is an extension of your team.
So we know that we've been through a season of repurchase risk for lenders. It's been tough, and actually we had the head of the FHFA at one of our events, and she was like, they should be hiring due diligence people. Like there are great firms out there they need to be taking advantage of. I think this is 2023. When I asked her about it, so you guys are one of those leaders of due diligence. So I know we're in a potentially different environment going into maybe a Trump administration with regulation. At the same time, there's so many other regulators. Like if you think about state regulators, I just feel like compliance is always a concern and repurchase is always a concern. So how do you feel like coming in as that due diligence leader? How do you help with that?
So it's a little bit about what we talked about earlier in terms of, because we provide such a significant amount of due diligence in the market today, we see so many files that those items that, when I talked about trends or red flags, if we're reviewing a file on the due diligence side and there happen to be 4 or 5 exceptions that typically resurface, whether it be from a client from a particular geographical area or a new reg that's put in place, right? We can feed that back into now our front end team and address it before it becomes an issue. So it becomes much more efficient for the originator to close and sell that loan and move it through the secondary markets if it comes in cleaner. I mean, that's the best way to put it, right? And they can do that because we're providing the intel that we gather from everything we see on the due diligence side into our underwriting team and origination support team on the front end side, so that it's probably not the best thing. It's like having the answers to the test before you take the test.
I really like that. So, let me ask you this. Do you see any hesitancy on lenders, or not hesitancy, but more like the attitude of like, oh, compliance is going to be less important as we go forward? Or do they have that sort of, long view that's like, we could do a look back at any time? I mean, just because, we're heading into maybe a less contentious compliance environment, that doesn't mean that all those things go away. What do you see from your clients?
They don't go away, and there's always a focus on it. And we have a large compliance group within Situs AMC that work with the client's compliance department on the front end. Talked about some of the regs. As a provider of these types of services, we need to be licensed state by state by state, and each state has different regulatory requirements. Now, all our folks are NIMLIS registered and passed as well as the organization, the individuals are all licensed state by state. So they bring with them, that knowledge as well. So it's not like an OCC regulator or a federal regulator where you just have one entity. We're really regulated by 50 states.
I think that's such an important point right now. If anyone thinks that, oh, this is going to be, and maybe it will be on some levels, but I just feel like mortgage compliance, mortgage regulation, there's no easy fix to that.
No, and again, it goes back to, if we've always approached it, and I've approached it with our teams, it's a manufacturing process. You're manufacturing data. And the tighter that data is and the more reliable that data is from trusted sources, the more compliant it is, the less risky it is from all different perspectives. And
about some of that, how you take that data-driven insights, right? How do you apply those? What are some of those things specifically that people may not know?
So you do have, and we're required, it's separate teams. So when we talk about the primary market and secondary market, it's different management teams, it's different individuals. But those folks meet on a regular basis to basically knowledge share best practices of what they see that's going on. So that if they see a particular reg, that if there's something new that went into place that becomes more frequent on the back end, we make sure to get that information to the teams on the primary market so that they're incorporating that into the view. So it's a living, breathing audit, if you will. So it's not as if somebody's taking a checklist and saying, we're good. Each day, each week, the constant feedback loop with different things that we're seeing on the secondary market gets provided to the front end side to keep on, making that mortgage industry, it's never a perfect, right? It's our quality is 99.6%, which is about as high as you get, and it's higher than any other standards in the industry. But there's always, it's a difficult process. There's still, a lot of data to deal with, and our objective is to just keep on making our target's always 100%. But
what kinds of clients do you feel like you're a great partner for? How do you know that like this is going to be a great partnership with? Is it defined by what kind of lender they are? Is it defined on their business model? What does that look like?
So that's the when I talked earlier about being able to customize things, we've worked with new entrants, de novos. It's great there because we're plug and play. And we can also provide information on helping them get set up, and launching because we've done it over and over again. So, and if they decide, for instance, that they want to retain certain pieces, because they have the skill set, or they have an acquisition that we see happen from time to time where they have certain folks that are great in this area, we can fill in the gaps. So it's never really, a certain type. There's opportunities where we do component work. And by component work, it's some of the things I was talking about earlier, where we will do back office support, where we clear conditions, where we send out disclosures, where we do a lot of the typical back office tasks. And they have folks that are wonderful, right, on the customer service side. That's probably a typical example. We can also, we talked about the processor, we can make every one of those positions more efficient, because essentially, we're doing the back office tasks behind the scenes that allows them to free up to do what they're best with.
That's a really interesting insight, is that like if you're providing this service over here, you're making other positions more efficient, because everybody is all about that. They have to be right now because lenders, it costs so much right now to do the loan. So those efficiencies, especially over multiple people, can be impactful.
So what it lets you do too, and back to another example from when on the origination side, no matter what role, there are different tasks associated with that role where it'll require some phone work, it'll require, math skills, it'll require, diligence type skills. And to find one person that is really great at all three of those, we call those people, senior managers or directors, right?
Right.
So what we can do, and what we found is when I would use partners to support some of the work that we did on the origination side, I would in fact have them do those types of tasks that would provide the back office support for my folks. And we would hire people that were the best on the phone you've ever seen, or the best on email that you've ever seen, because you want the borrower to have a warm experience. You want the borrower to come back. I mean, you want to build your book of business. You want that customer for life, whether it's through referrals or whether it's through a refinance or whether they're buying their next home. And the way you do that is, they know Sarah or they know John, and that's who they're going to come to get their mortgage. And they do, because you build those relationships. And it's much easier to do that when you hire the right people to foster those, and not try to have somebody that can do the entire thing.
How important do you think it is that you have that background in origination yourself?
So if you ask my team, when I first came over to the partnership side or vendor side, we got into a room and I basically listed out the 12 reasons why I fired my vendor partners. Rotating resources, non-dedicated teams. And I said, these are the things that we're not going to do. And then on the other side of the board, we put, this is what we're going to do. And there were a lot of things that we did. And it's this industry, if you haven't been a client, you really don't understand. There's firms out there, and I was with a consulting firm many years ago too, where they hire you based on your skills. But if you haven't really lived it, you can't understand how to approach it and support. You have to, and so like I talked about earlier, you have to live it on the retail side, because a retail bank is going to be completely different than an aggregator that's dealing with correspondents and brokers. You need somebody to support them differently, because the skills that are required to talk to a retail loan officer are different than somebody who's running a broker shop. And that makes a difference.
It makes a huge difference. I also think like it's sort of like when you think about tech people, it's like the first and most important thing is what problems should you be solving? Not, oh, I can do X, Y, Z. It's like, but what is it actually that they need? And I feel like that's where where that experience comes in, and you can get to the heart of it quicker.
That's the goal. And because back to Situs AMC, we touch every part of the residential real estate industry. So having all of that to draw from, whether it's through warehouse support services or servicing or all those different areas, it gives us a unique advantage. And again, a lot of the folks that came from, the client side.
When you look at 2025, what are you optimistic about?
Growth.
Growth for just Situs AMC or the industry, or what are you seeing?
I see industry growth, which means it's an opportunistic growth for Situs AMC, because I believe we're positioned to capitalize on the different pockets wherever it may occur.
It feels like an opportune time for you guys to be offering these services when, to your point, people have to be looking at different kinds of loan products, and they also have to be really careful about their efficiencies.
We're their insurance policy for that uncertain market.
Love it. Well, Jon, thanks so much for coming on the podcast today. Really appreciate you talking, and I learned a lot. I love talking to industry folks like yourself and knowing more about what you guys are doing.
Thank you so much, Sarah. Really appreciate the invite.